In this video, we're going to be going over a very exciting stock, a stock that is very undervalued, that is tied to the uranium sector. I found out a lot of great information about the stock that no one really is talking about. I'm going to deep dive into the stock as well as give a picture of the overall market right now. There are some inflation worries, and I think that this stock, because it has been beaten down just like uranium was, it has a very big upside, a possible 10x upside in the future. It is really forward-looking, the stock is, and they're really looking to the future and really helping with the new SMR, small modular reactors, for sustainable energy as well. And there's some very exciting news. I've covered the stock before, Rolls-Royce, but I'm actually going to be going deeper into this stock and talking about some things that I think I really am one of the only ones really talking about, because I was working on in the military Rolls-Royce engines, especially for our small boats. So I do know a lot about what they're talking about. Recently, in the past day, this EO came out and he was talking about this. So looking right now live at the overall stock market, this is the 20th. This is the Australian Stock Exchange for the uranium sector. Today was up big in the United States. You know, a lot of the bigger uranium stocks were up, you know, very, very big. UEC ran a bunch, UUU, Energy Fuels, and Denison both as well. But as you see, the ASX, a lot of them are down again. One of the things that happened today, the US dollar index fell 0.1%. So the expectations were mounting that faster monetary policy would tighten in other countries, and a rallying equity and commodity markets sap demand for safe haven assets. So inflation pressures are raising expectations in the UK, the euro, and the Australian and New Zealand dollar. They actually may hike the rates. So the Australian dollar and New Zealand as well, dollar went up, I believe. I think it was, they're near a 3-month high, Australian dollar, yep. And the New Zealand dollar went to a 4-month high. So we're starting to see inflation. Brent hits a 3-year high. That was another thing happened today. And then gasoline and corn both hit 7-year highs. So we're getting inflation. They're going to have to raise rates. And I think that one of the safe bets for me, obviously I've been talking about, is uranium. The overall, this is the 1 month. Alibaba stock is back up pretty big, 17% in the last month. So a lot of these stocks over here in the East have gone up, have recovered a little bit. People were worried about the default there in China. I still keep my eye on it, but what I really want to talk about here is Rolls-Royce stock. Now, Rolls-Royce stock is a couple dollars. It actually traded about $1.86. I traded RYCEF, and this is the RYCEY because I wanted to show you guys. It's the same stock, but this one gets a dividend, RYCEF doesn't, and there's no fees for that. But they did have a split there in 2015. So a 5-to-1 split, same as I believe Tesla, and Apple both had. So the stock price goes down on the chart. So it does skew things up a little bit. But I think we could get back to this $20+ range. And I'll show you, I'm going to deep dive into the stock and I'll show you why. And there's some big things going on with the stock that no one's really talking about. Most people probably don't understand what this is going to do to the revenue. The company cut back a bunch. The first thing is they got this new Air Force B-52 bomber contract, and it's right around the 100-year birthday for the company, which is pretty cool. So since none of the 8 Rolls-Royce engines on the B-52 will have to be removed when they overhaul them, the maintenance burden is a lot less, and it drives down the sustainment burden. It drives it down. So I actually worked on these Rolls-Royce engines in the military. So a lot of times we have these maintenance we got to do on these, daily, monthly, yearly, and we'll send these things in, and it was very annoying. So if you had to pull them out and send them in, it was cost a lot more money, all these things. So with them being able to fly it right there and not even have to take them off in the hangar, this is going to be a lot more bullish, I think, and cut down cost and time, which means the military probably will want to do more. They'll see this as a better investment. Another thing, Rolls-Royce is keen to partner with the Indian Navy's electrification journey to its fleet of the future. So Rolls-Royce is the only manufacturer in the world that has provided navalized marine gas turbine generators in frontline integrated full electric propulsion. So these new subs, this is a big deal. It just means more money, more eyes are on this company, more money's coming to this company as well. They've got a backlog already. And I really want to touch why this stock went down. This was good. This is done by Richard of Teal Group. He wrote this. He said, few major British companies have been as badly affected as Rolls-Royce Holdings. So the marine engine maker, not only to be confused with a luxury car maker, by the way, they're two separate companies. Always forget to say that. They separated like 50 years ago, but still the same name, obviously. But commercial aviation collapsed last year. Rolls-Royce plunged into a near $5.5 billion loss. It shed 9,000 staff and was forced to sell assets and raise fresh capital. Okay, so they're almost exclusively exposed to the international traffic due to the heavy presence of a wide-body jets. So, we saw the stock drop, big time. So it's one of the few stocks that hasn't really recovered. That's why it's on my radar. I'm looking to invest a lot more into the stock. So the company's problems were compounded by its business model. Rolls-Royce makes its money from repairing, and that's where I was going earlier with this. Sustainment from them not having to take as much time, the costs when they take these engines out, they'll stay on the wing. And there's 8 engines. There's 8 of them on each B-52 bomber. I'll show those in a minute. Very interesting. The fact that they don't have to take these off, I think it's going to bring them a lot more money. And when they repair, because that's really where they get the bulk of their money, is when they repair these engines. So when we look at the B-52 bomber, like I said, there's 8 engines on here, and they've got a new, they actually got 600 new engines, a new deal that the U.S. Air Force purchased. Okay, so these B-52 bomber engines, they'll stay on the plane when they actually do the maintenance. One thing is, it's really cutting down the cost, I think. Here's another picture I have of the B-52. So that's a lot of engines, 600 plus. And not only are they going to be making money from the sale of these engines, but the maintenance that the U.S. Air Force has to do. We're going to jump into in a second the numbers and everything, but I want to reiterate for anyone who doesn't know, this is a small portion of Rolls-Royce, and it's really what got my eyes back on them. They're looking to build small modular reactors, these SMRs, and space travel. These NTPs in space, nuclear thermal propulsion. This is going to be the future. This is very big. If they can get this going, it's going to bring a lot of investors into the company. What they want to do is they want to mine on the moon, they want to mine on other planets in space, and they want to utilize their small modular reactors, which are a real thing. And they're actually starting, this was pretty big, they're starting a new, they actually got around 120 million euro today, actually, from the European government for these new small modular reactors. So this is very big. This is actually obviously going to be on the Earth there in Europe. But one thing, to look at is if like I said, if they're able to get this going and really get the space part of their company going, I think that you could see this company be $100 billion plus market cap. It's very, very, very undervalued right now. It's a $2 stock. I compare it with Boeing. The thing is, they need to get things going again with their main revenue source, which we already talked about. In this presentation, I'm going to go over quickly. I'm going to break down some things about the company, some numbers. So they're actually brought in 2020 $11.7 billion in revenue, and this was from a multitude of different revenue streams, but the mainstream is the civil aerospace and defense. Okay, they're in a lot of fields and they have a lot of revenue streams coming in. One big thing is they're looking for this net zero target by 2023 for their aircraft engines. So this was something I think that it's very interesting because this is where the world's going. This net zero targets by 2030, they're looking for all their products to be net zero. So it's going to get them these contracts. We already saw the government contracts coming in. And really what they did, we're going to jump down here. So they cut a lot of roles in their company, 9,000 different, cuts that they had. They're bringing in a lot more money because of this. I think there are a lot more, it's sad that they did this, but a lot of these people was voluntary severance that happened. But I think that the company is looking to be obviously more sustainable, but they're looking to operate a lot faster. If they're not having to take these engines out, they don't, off the plane, and it's still, on the B-52, it's going to take a lot less time. If we look into the future, what they're looking to do, they've got their hands in hydrogen, the energy storage, the small modular reactors, urban air mobility, their first commercial contract for electric propulsion units. It's still, there's just so much with this company to look at. I think their biggest upsides, though, will be getting the revenue stream coming back in with the cost that they actually cut down. It's really going to help their numbers. And when that starts to come in, people are going to start to want to invest in this company long-term again. That's what this stock really is, a long-term investment. Although the stock has ran a lot since I last covered it, it was around $1.50, and it's recently hit $2. I think it's $1.80 something today. This stock has massive upside. One of the last things we'll cover here, we're looking at their engines. Large engine deliveries, 2020 was 264. 2021 plus, 250 plus when those contracts with the U.S. Air Force will come in. So we still haven't seen this on here. This was actually from September. So they recently got that Air Force contract. So you're going to see a lot more cash flow coming in. The numbers for these, I believe it's down here. All of these engines that they had, engines on order, there's a bunch of these. So when the companies, a lot of these companies had to ground a lot of the planes, they put these orders on hold. So I think as you see, back here when we saw the biggest stock run in 2013, we had a lot more engines out there, engines being delivered as well. And obviously a lot less in the last, year or so. Couple years. So we saw the stock, obviously get hit because of that. So we see these numbers go back up. The stock is going to definitely recover. We're going to see these numbers go up tremendously in the future. Just so many revenue streams for this company coming in. This company is probably one of the most undervalued stocks out there with a P/E ratio, I think less than 3 still. There is a good amount of shares in the company. Its market cap, about 16 billion. I think this company could get to be a $100 billion market cap, especially with the space, the space travel stuff. If we get that, that's going to be huge for the stock. Massive. And a lot of stocks in the market are very overvalued. This is definitely not a stock that's overvalued. The one thing that I wish was fixed was there is a lot of shares. There's 8 billion shares in this stock. Now, they do have about $2.9 billion cash. The debt we already kind of talked about. They will be able to pay that down a lot with the revenue coming in. And, I think the stock has probably one of the biggest upsides in the market because it is related to the uranium industry, and if they get these small modular reactors, which more news today happened, Canada, they're looking to get these small modular reactors in. So they got a new deal with a company with Cameco and BWXT. They're actually making these small modular reactors. They're looking to get these out soon. And what's really great about this is it really is going to open the door for new reactors across the world to be implemented in other countries, especially countries that, don't have a nuclear presence yet, because they're a lot safer. These small modular reactors, once they see that they are safe, countries I think are just going to jump onto it. Especially a lot of smaller countries that really rely on coal and have been hit hard with that. So China, India, I think we could see a lot more small modular reactors coming, and Rolls-Royce is going to play a big part of that. So this stock, $1.86 right now, it's insanity. I think the stock, we could see $10 very soon on a recovery. Just look at other recovery stocks, that have bounced back from when we had the big drop. This is one that has not recovered yet. And because things have changed really big for the company's very smart. I think this stock is number one on my radar. I think for larger stocks, other than uranium stocks, number one on my radar to load more in. And it's a long-term investment for me. So if you guys like this video, if you like Rolls-Royce, let me know below. Hit the like and subscribe. And until next time.